Something weird is happening in Raleigh's housing market. Raleigh's housing market is holding up well, especially when you compare it to the rest of the U.S. markets. You know, our local home prices are softening far less than what most of the country is seeing right now. But in new construction space, a different game is being played, and most buyers and sellers don't even know it's happening. So after years of living in Raleigh and helping families buy and sell their homes here, I'm going to talk to you about what's happening behind the scenes in new construction and how that affects our overall housing market. First, let me talk about how builders keep prices high while secretly discounting to buyers. If you walk in any new construction sales office in the Triangle today, nothing will seem off. Everything's in place. The prices are posted, the model homes are gorgeous, and everything looks stable on the surface. But what's really happening between that sticker price and the check a buyer writes every single month is what this video is all about. So let's start with what the surface numbers actually show us. Wake County's median sale price has held steady in the way that should be getting more attention in the news media. We're in the mid 400s to the mid to high 470s, depending on what part of the county that you're looking. And that's essentially flat compared to last year's home sales. And when you compare that to places like Austin or Tampa, which are seeing a steep decline in pricing during this same period, Raleigh looks almost boring. But wait, I mean that in the best possible way. It's good to have a stable housing market. A major study from the North Carolina Chamber Foundation, analyzed by NC State economists, projected that Wake County could be about 110,000 homes short of demand by 2029, and that's just 3 years away. So that kind of undersupply doesn't just vanish. It's a big reason why prices haven't fallen here like they have in the other high-growth metro markets. But stable prices and a healthy market aren't always the same thing. And in new construction specifically, something's happening that these headline numbers are not telling you. You know, builders aren't cutting their list price. A home listed at $525,000 is still listed at $525,000. And when that sale records, appraisers use it as a comparable for the next home in that community. Everything on paper looks stable, and that's what builders are counting on. Because when we get to the game that builders are playing on financing, I'll show you the exact questions to ask before signing anything. Most buyers never think to ask these questions. So now what buyers are getting instead of price cut is a stack of incentives. You know, often builders offer a rate buy down that drops their interest rate well below current market levels, a credit towards closing costs, maybe a design package or an appliance bundle on top of whatever works to get that buyer under contract. Take all of that away and look at the real monthly cost, and that $525,000 home is a lot cheaper than it seems on paper. Why do builders do it this way? Well, it's pretty simple. Price cuts are permanent, and the moment a builder drops the price by $30,000, every future appraisal in that community drops to that lower number, and the rest of their inventory loses value on paper. Incentives don't carry that problem, on the other hand. They're flexible. They change week after week, and they don't show up in the public records in the same way. So as one senior economist at Realtor.com put it this way: builders are pricing aggressively, they've got inventory to move, and they're willing to discount it. They just prefer to do it without making headlines. You know, nationally, about 2/3 of builders began using sales incentives by the mid-2025 market, and this was the highest rate since before the pandemic. In the Triangle right now, we're seeing promotions that make this crystal clear. Drees Homes was offering up to $25,000 in flex cash on a select quick move-in home in Raleigh-Durham area. MI Homes ran a 2-1 buy down, bringing the first-year rates down to under 3%. In Wendell Falls, Homes by Dickerson was offering up to $30,000 that buyers could apply however they wanted. Price reduction, buy down, closing cost, upgrades, their choice. And if you walk into any new construction sales office without knowing what to ask for, you're going to leave money on the table. And that is a good reason to have a great agent in your corner, not working for the builder. So the real question is, where in the triangle are the biggest stack of buried deals sitting right now? So please remember, if you're shopping for new construction in the triangle or a resale homeowner trying to figure out how to compete with the incentives like the builders are offering, I'd love to help you work through your specific situation. And my contact information is in the description below. Reach out. Shockingly, I may answer the phone. So right now, let's ask, where's the best new construction deals are hiding in Raleigh? You know, not all new construction in the triangle is playing the same game. And the gap between where the real leverage is and where buyers tend to look first is bigger than most people realize. The reason for that? Location is king, and it always will be. There are two very different situations happening side by side right now, and understand this split is key to saving you from wasting months chasing the wrong inventory. First up, completed homes, what builders call quick move-ins. These are finished properties sitting in finished communities just waiting for a buyer. And that's the reality of it. Every day a completed home sits, the builder's burning money, construction loan interest, property taxes, carrying cost on every home that sits. A home that's been finished and sitting on the market for 30 days or more is essentially a motivated seller that just happens to be a builder versus a homeowner. And that's where the real room for negotiation begins. And that's where you'll find the most meaningful incentives in new construction. So now let's talk about pre-construction. You see a new construction neighborhood, you like it, you want to pick out your lot, and you want to have some choices in how the interior is finished. Here is what you need to know. You are locking in early, and the builder hasn't invested heavily yet, and there's no or little carrying cost pressure driving that builder's urgency. Incentives still exist. Builders never let a sale walk out without offering something, but the floor is higher and the flexibility is much lower. So if you're shopping for new construction in the triangle right now, here's your playbook. Pick an agent that knows the new construction market. That agent will target completed homes that have been sitting for 30 days or more. Seasoned agents will ask specifically about quick move-in specials. These aren't always posted online, and they can shift based on the quarter-end pressure and where the community is in its building out phase. I should add that seasoned agents will make it their business to know the on-site builder's rep. They will call the sales office directly and ask, what's sitting? What do you need to sell first? Communities in areas like Wake Forest, Knightdale, and Wendell, and a few others have a real concentration of this type of inventory right now. And the deals are there, and they're real deals. It pays to get specific when you ask about rate buydowns, because the most common tool that builders are using right now are the 2-1 buydown. And this is a powerful option, but there's a detail that lots of buyers miss. The builder pays up front to reduce your rate by 2 points in the year 1 and 1 point in year 2. So year 3, you reset to the full contracted rate for the rest of the loan's life. So if your contracted rate is 6.5%, you're at 4.5% in year 1, 5.5% in year 2, and 6.5% in year 3 onward, unless you've refinanced. The savings in year 1 and year 2 are real money, but that year 3 reset is your actual long-term cost, and you need to be secure with your full payment before you sign anything. I don't want you walking into a new build feeling like you've got a great deal only to be blindsided 2 years later with a payment you cannot handle comfortably. Knowing how to read these incentives is honestly half of the battle. Today's buyers aren't necessarily comparing list price to builder's list price. They're comparing what they'll actually write a check for every month. And that shift in perspective changes everything about how both buyers and sellers need to approach this market right now. Let's get practical on both sides. If you're buying new construction, the biggest habit shift is learning to track the effective price, not just the list price. A home listed at $525,000 with zero incentives cost you $525,000. But that same home with a rate buy down saving you hundreds per month, a $10,000 credit towards closing cost and $8,000 in design upgrades, or the effective price is more like the low to mid $490,000 range. So you account for all the value that's being transferred. The sale still records at a list price of $525,000. The comp still shows $525,000, but the economic cost to you is lower, and that gap is real money most buyers never ask for or stop short of the best terms. Note to self, the on-list agent works for the builder, not for you, and the cost of your representation is built into new build's list price. There's a lot of completed communities in the Triangle that don't post their full incentive packages online because those packages change frequently. So agents that know new construction are calling the sales office regularly during your search to find the smart deals. Now, one more thing on the buy down math, because I hear this logic a lot and I want to address it heads on. Some buyers will say to me, I'll take whatever rate the builder's offering, and when rates drop, I'll refinance and save even more. And that sounds great, but if you're already at a builder subsidized rate somewhere around 5.25 to 5.3 and the market rate drops to 5.5%, refinancing won't save you anything. You'll be moving to a higher rate. Before assuming a refi fixes everything later, model your break even against where you actually are. That number matters a lot. So now if you're selling a resale home near active new construction, this is where most people aren't having the conversation, and I think it's a big mistake. Builders are offering rates that average nearly a full percentage point below what the resale buyers are getting, and in some Triangle communities even more than that. A builder-backed loan at around 5.25% on a $525,000 home results in a very different monthly payment than a conventional loan in the mid to upper sixes on a resale priced at $500,000, even though your price looks lower on paper. Run the numbers and the new construction ends up being less expensive month to month, and that's what buyers are looking for. That's why resale homes near active build corridors are sitting longer and seeing offers come in under list price. So now this doesn't mean resale is a losing proposition. Established neighborhoods, mature trees, character, instant livability, and no construction noise next door for a couple of years, new construction can't replicate that. But you have to make those advantages clear because buyers aren't connecting those dots on their own when a sales rep is handing them an incentive sheet. Strategic pricing from day one is an art form to a savvy agent. So don't price high just to leave room for negotiation. That strategy is keeping homes on the market too long. With 40% of our homes having to reduce their initial list price, this is a simple fact. You will not see a home that's been on the market for 60 days sell over list price. But that's still happening in top neighborhoods, top locations, even in a stronger buyer's market. So homes that are priced right, staged well, marketed aggressively, and photographed professionally are still moving in Wake County. The market isn't broken. It just requires an honest look at what you're actually competing against. So whether you're on the buying side or the selling side, it all comes down to having somebody who knows how to read this market at a level that most people don't. And that's what I want to talk to you about. If you're buying new construction in the Triangle or selling a resale homes and you need a real pricing strategy, reach out at Marty at martyhampton.com. Let's run those numbers for your situation. And hey, choosing the right neighborhood in Raleigh matters just as much as knowing how to buy. So if you're unsure which areas are holding value, this video I've linked breaks down exactly which Raleigh neighborhoods buyers are moving to and which ones are stalling out. Thanks for watching. I'll see you next time.